Hey traders, and welcome back to another session of Trade Like Assad. In today's breakdown, we're taking a closer look at one of the foundational trading strategies within smart money concepts, leveraging the powerful indicator known as the change of character. For many traders, building setups around the CH can feel overwhelming, often putting their positions at unnecessary risk due to not fully understanding the essential techniques we're about to go over. In this session, we'll not only walk you through critical tips but also demonstrate exactly when and where to enter and exit a change of character setup using a fine-tuned approach. So traders, if you're into this kind of deep dive content, make sure to hit that thumbs up and don't forget to subscribe if you're tuning in for the first time. Catch you right after the intro. Welcome back, traders. Let's dive right in. As you're already aware, smart money concepts generally categorize entry techniques into two main types: reversal entries and continuation entries. Under the reversal category, we have methods like change of character and flips. We've already broken down the full set of conditions and guidelines required to identify a valid change of character setup in previous sessions. If you haven't checked those out yet, I strongly encourage you to explore our channel. They offer key insights that will help you grasp CH more effectively. In this episode, we're bringing all that learning together. You'll see how to apply these principles strategically and build a solid trading plan focused on the change of character. This method generally yields a higher win rate when applied with accuracy in entry and exit execution. So now, let's walk through the fundamental steps that are crucial when incorporating the change of character into your overall trading strategy. Begin with market structure mapping on the 4-hour time frame, identifying any key unmitigated zones of interest. Wait for price to reach a demand or supply zone within that 4-hour chart. In the second step, shift to the 15-minute time frame to observe price behavior with greater clarity and look out for any indications of a change of character forming. If a valid CH pattern appears on the 15-minute chart, move to step 3. Zoom into the 1-minute time frame and examine for additional signs of a change of character at this level. Once all these conditions are met, you're ready for the final step, executing your entry on the 1-minute time frame. This gives us a structured framework for applying the change of character methodology effectively in live trading conditions. Let's break down each step, starting with the first one. Picture a 4-hour market structure, like the one shown on screen. The price is clearly trending downward and has printed multiple bearish BOS. In this setup, we can see an unmitigated supply zone located at the extreme. Let's assume this gives us an ideal sell scenario on the 4-hour chart, which aligns with the established rules of a high-probability trading setup. The next step involves shifting to the 15-minute time frame, where we observe the price action in more detail and wait for the market to revisit that 4-hour supply zone and develop a change of character. Once we identify the confirmation of this market structure shift on the 15-minute chart, we then proceed with our trading approach. At this stage, the first thing we need to do is locate and mark the supply zone created by the bearish impulse that caused the change of character on the 15-minute time frame. Next, we zoom into the 1-minute time frame and wait patiently for the price to revisit the 15-minute supply zone we previously marked. Once the price reacts and begins to reverse from that level, we watch closely for a fresh change of character forming on the 1-minute chart. After confirming the ChoCH on the 1-minute time frame, our next move is to pinpoint the order block created by the bearish leg that caused the change of character. Following that, we set a sell limit order at the lowest price point of that order block, while placing our stop loss just a few pips above the highest point of that same zone. As for our take profit, we can target an unmitigated demand zone on a higher time frame such as the 15-minute or 1-hour chart, or aim for the swing low on the active chart. This step-by-step method ensures a clean entry with a clear risk-to-reward ratio. If the ChoCH is missed or price action turns erratic, your order may remain untriggered or get bypassed entirely. In such cases, executing a continuation trade becomes the most straightforward and reliable method to enter the market. For instance, let's assume you missed the earlier entry during the change of character, or you're aiming to open additional short positions. After mitigating the supply zone, the price reversed and shifted its character to the downside by breaking structure and closing below key levels while violating multiple demand zones. If you didn't manage to open a position from the ChoCH-based supply zone, the best option is to apply the smart money concept's continuation strategy to find your next entry. To implement this, the market must break the most recent structure downward, pushing through those 1-minute demand zones, and thereby forming a new supply zone. However, placing a limit order directly at this newly formed supply zone is not advised due to the inherent risk of inducement. The market may use that zone to trap liquidity, increasing the chance of a fake out. Instead, we should wait for the price to form liquidity traps, then sweep those zones before entering the supply zone. The ideal scenario is a pullback after a structural break, during which the market creates liquidity formations like equal lows, double bottoms, triple bottoms, or trendline liquidity just below the new supply zone. Whether the price breaks lower or consolidates in that range doesn't matter. The key is that liquidity zones are formed and then cleared before our zone is tapped. Once that happens, we can confidently place a sell limit order at the lowest boundary of the supply zone, since the liquidity sweep provides a strong confirmation factor that significantly enhances trade reliability. There are 4 key conditions that must be fulfilled before initiating any continuation trades. The first condition requires the price to establish either a change of character or a flip pattern after tapping into a higher time frame supply or demand zone. The second rule involves patiently waiting for a break of structure and a clear zone breakout in the price action. The third guideline stresses that the price must leave behind inefficiency while executing the break of structure. The final and most critical rule is the existence of static liquidity zones positioned near the marked point of interest. To sum it up, for a valid continuation trade to be triggered, all of these conditions must be fully satisfied. There are no exceptions or shortcuts in this approach. At this stage, with all the required conditions satisfied, we proceed by placing our sell limit order at the lowest boundary of the supply zone, setting the stop loss just a few pips above the highest boundary of that area. When it comes to the take profit, we have the flexibility to aim for the unmitigated demand zone visible on a higher time frame like the 15-minute or 1 hour, or alternatively, target the swing low within the current time frame. Moving forward, we observe that the market has once again printed a new break of structure and breached the next demand zone, leaving behind inefficiency. As a result, there's a fresh unmitigated supply zone forming on the 1-minute chart. Alongside that, the price action has also developed a bearish trendline liquidity trap just beneath our newly spotted supply zone. In this context, it's highly probable that price will push upward, clearing liquidity above the trendline, likely hitting retail traders' stop losses, while also filling the inefficiency before tapping into the extreme supply zone. Since every condition of the continuation entry strategy is now fulfilled, we are set to position our sell limit order at the upper boundary of the order block and choose the 15-minute swing low as the take profit target, allowing us to run multiple entries in parallel. There are specific guidelines and considerations that must be followed to minimize risk exposure. It's crucial to cap the number of open trades at no more than 3 positions simultaneously. Keep in mind, the position size used for the initial entry should be reduced by half for the next trades. For instance, if your first position size is 2 lots, it's recommended to risk only 1 lot for each of the following setups. Now, let's shift over to the live chart and break down a few trade examples. Displayed here is the EUR4 United States dollars hour chart, showing a generally bullish market trend. The price action first swept the sell side liquidity resting beneath the equal lows, then made an aggressive upward move. It breached the most recent significant high, resulting in a bullish break of structure with noticeable inefficiency. Following that, we observe the price losing upward momentum, pausing briefly, and then shifting direction to the downside. It broke below the low of this candle, clearing the inducement level, which represents the latest internal retracement formed during the previous rally. With the inducement cleared, these high and low points are confirmed as valid structural levels, marking this as a confirmed break of structure. Given this valid bullish boss, we're now in a position to locate a demand zone or order block tied to that structure. As seen next, the price pulled back, corrected the inefficiency, and revisited our marked demand zone. At this point, we expect a bullish reaction and potential reversal. Now that price has interacted with the 4-hour demand zone, we move to lower time frames for further refinement. At this stage, we shift to the 15-minute time frame, which offers a more detailed view of price behavior and allows us to spot any early signs of a change of character, ChoCH. On this lower time frame, we can observe that the market was trending downward until price interacted with the 4-hour demand zone. Upon reaching that zone, the market reversed, rallied upward, broke through two consecutive structures, and left behind a noticeable inefficiency. Now the key question arises: does this ChoCH reflect a high probability setup for trade execution? As discussed in earlier sessions, several critical rules and criteria must be satisfied to validate a high-quality change of character. First, for a ChoCH to be considered valid, the reversal must originate from a higher time frame supply or demand zone, and only then should it break the most recent major structure. In this case, that condition is clearly met, as price pivoted from the 4-hour demand zone before initiating a structural shift. Second, for a ChoCH to carry higher probability, it should occur after sweeping static liquidity zones, such as equal lows or highs, before tapping into the supply-demand zone. Here, we observe that price cleared the liquidity below equal lows before its bearish movement ended and the bullish reversal began. Third, a high probability ChoCH should result in a break and close above or below at least two successive structures or zones. Once again, we see this criterion fulfilled. Price broke two structural highs following its interaction with the demand zone. With all these conditions satisfied, we can confidently confirm that this change of character pattern is a high-quality setup. The next step involves identifying and marking the demand zone created by the bullish impulse wave that formed this ChoCH on the 15-minute time frame. Next, we need to zoom into the 1-minute time frame and patiently wait for the price to tap into the identified 15-minute time frame demand zone, triggering a reversal and creating a new change of character on the 1-minute time frame. Here we have the 1-minute time frame on the screen. We see that the price was in a downtrend and had created a series of BOS until it reached the 15-minute time frame demand zone. After tapping into the demand zone, the price reversed its direction, subsided its bearish momentum, and then started to push upside with inefficiency. It created a change of character by breaking and closing above the most recent structure. Once the change of character is confirmed on the 1-minute time frame, our next course of action is to identify the order block generated by ChoCH wave in the 1-minute time frame. Subsequently, we place a buy limit order at the highest point of the zone, with a stop loss set a few pips below the lowest point of the area. As for the take profit, we set our target at the swing high of the current time frame. Now that we have placed our buy limit order, let's see how the market reacts and see if our trade setup plays out successfully. As you can see in the following, the price pushed to the downside after mitigating our point of interest and also activating the buy limit order, reversed its direction, and moved upward. Now let's consider a scenario where we miss the change of character entry or we want to execute additional trades. As the price has shown a market structure shift, we are now looking to utilize the SMC continuation entry model to execute trades. Now let's see what happens with the price action. As you can see, after mitigating the change of character's demand zone, the price rapidly pushed to the upside with significant inefficiency, creating two successive bullish breaks of structure. Additionally, the price broke out of this 1-minute time frame supply zone. Next, we identify the demand zone associated with the recent bullish wave. Also, price formed equal lows above this new demand zone, which is generated by the bullish break of structure. As we mentioned before, to execute a trade based on the SMC continuation entry model, there are 4 essential criteria to consider. The first rule is that the price must form a change of character, and as you can see here, the price has done that. The next criteria is that the price must break structures and also break through supply or demand zones, and yes, we can see it on the chart. The third rule emphasizes that the price should have left inefficiency behind when forming a break of structure. It's clear that we have it here. The fourth and last rule is that the price must form liquidity zones near the identified point of interest, which has already been met here. Now that all criteria have been met, we can go ahead and place a buy limit order at our identified point of interest, with the stop loss a few pips below our zone, and also with half the size of the order that I executed earlier from the change of character's demand zone. And for the take profit, I am going to target the swing high. Now that we have placed our buy limit order, let's see how the market reacts and see if our trade setup plays out successfully. As you can see in the following, the price pushed to the downside, swept the liquidity accumulated below double bottoms, and after mitigating our point of interest and also activating the buy limit order, reversed its direction and moved upward. Now, we can see that the price has created another bullish break of structure with inefficiency. It broke through these supply zones. Next, we identified the demand zone associated with the recent bullish wave. We can already identify a bullish dynamic trend line just above our point of interest, creating a substantial liquidity pool waiting to be swept. Once again, if all the criteria are met and we are allowed to execute another long position, there are additional rules to consider. Avoid executing more than 3 trades at the same time. For the second and third orders, it's advisable to use half the size of the first position that was executed earlier. Now, in the next step, I'm going to place a buy limit order at the highest point of this order block. And for the take profit, I am aiming at the swing high. Now, we must monitor the market closely and let the trade unfold according to our analysis. Our buy order has been activated and we are officially in the market. As anticipated, the price moved upside after the activation of our last buy limit order. Eventually, all of the 3 trades hit the take profit target. That's it, traders. Thank you for watching this video. I hope you found it informative and useful. Don't forget to hit the subscribe button and turn on notifications to stay updated on our latest videos. We truly value your feedback and suggestions, so please leave your comments below and let us know what topics you'd like us to cover in future videos. We appreciate your continued support and look forward to seeing you in the next episode.